the way I look at the markets, at least, is, I'm always looking at the broad markets first. I'm not this person that's trying to look for every individual name set up known to man or woman. I'm trying to see what's the overall market showing first, because the overall market is going to be that kind of invisible hand that pushes the rest of the market to play out with high probability setups. If the market doesn't look good, or the market's in a weird place, then the chance of an individual setup in the market, especially stocks, is going to be a little iffy. So for me, the main thing that I'm looking at on the longer term side of things is the monthly and the weekly. I personally don't do any day trading or really even look at intraday charts. It's more daily, monthly, weekly, to get an idea of the overall trend. And so for SPY, there are some interesting things kind of happening into the end of the year. First of all, seasonality is very strong for all of the names, especially SPY and IWM. And IWM is definitely getting hit a little bit. We'll touch on that here shortly. But the thing about TrendSpider that I didn't add on here is the seasonality feature. So you can go in and you can see, how has a particular FX pair, stock, ETF performed over X amount of time. So
That's very interesting.
We are going into,
if you don't mind, I have a question about seasonality. When you look at seasonality, are they looking just at for like a currency pair, for example, would you just be looking to see if it's every September, how much does Euro USD go up or go down? That's basically what seasonality is, correct?
So on TrendSpider, it's, if Euro USD has a 65% win rate in September, that means that 65% of the time, September's close is higher than August's.
Makes sense. Got it. Perfect. Just wanted to clarify that. Okay, keep going.
Yeah, more of a function of the previous time frame, whether it's a day, month, week. But yeah, so going into the end of the year, it's historically a pretty strong time of year. Now, if you're looking at the technicals, on the left-hand side, I have the monthly chart. On the right-hand side, I have the weekly chart. And you'll see that we are starting to kind of get close to this longer-term resistance zone. So I'm always using zones. I'm not using an exact trend line. Price doesn't respect areas perfectly. It's
100%, bro. I agree so much. I hate when I see people drawing like 469.72. That's the level. It's like, why not 469.70 to 469.80? There's a range in there normally,
Yep, exactly. So that's the way I look at the markets. It's very much a zone-oriented approach. So we are starting to get up to that resistance above, but I mean, you can see that that circle does have a lot of room to the upside before we really touch the top of that resistance line. So, based on how the market's playing out this week, you do have you don't have great breadth. You've got a lot of names kind of looking like crap, and you've got some of the bigger FANG names really holding the market up, which is always a little concerning. So the fact that we are getting close to the monthly resistance zone, that's something to keep in mind longer term. On the weekly, we do have this really, really kind of narrow ascending wedge starting to form. So we've been forming over the last few months, but you can see we are starting to get to the apex of that. And same thing, I'm using these zones rather than exact lines because I'm able to capture more price action to make these zones stronger than just connecting 2 points and extending it. That's not the strongest trend line. But if you make these zones, you've got a lot more price action respecting these areas, and they become stronger levels of interest. So
love it. I love that. This is very cool. I've never seen this done on any Forex pairs or anything like that. This is very cool.
Thank you.
Yeah.
And so we're like kind of getting close to the apex here on the weekly. The weekly's on the right-hand side. And so I have two arrows, and my guess kind of going into the end of the year is we're going to land somewhere around these two areas. Now, I don't have a crystal ball. I don't know what is going to happen.
You don't? What did you do with the crystal ball, bro? I sent it to you a couple of months ago. What did you do with it?
Threw it out the window. Thank you for it, though. It was a very nice gift. But yeah, I mean, like I'm just following price action. I'm not here to say, yeah, we're gonna hit this, we're gonna hit that. I do come up with kind of like general ideas like, hey, we're breaking out of long-term resistance or support. This is where I'm thinking we could head. But as always, you have to follow price action. Not a bad weekly candle forming. I don't know exactly what the market's doing right now. I'm in Denver. I really don't even look at the markets too much until probably 15, 30 minutes after the market opens because it's just noise before that.
Yep.
So the main target I've got above, and a lot of people have this target, which is a little worrisome, but 480 to 485 to the upside. If we do continue to melt up, have a Santa Claus rally, downside, maybe retest that ascending wedge zone around 448 to around 452. That's that green box below.
Okay.
And we'll see what happens. But Bitcoin is where we're really going to get into the liquidity of the market. So let's move on to the Qs and take a look at those. And we'll kind of see a very similar thing. So on the monthly chart, what I have is I have the volume by price, and you can see here the COVID lows highlighted in blue. That is where I like to measure the volume by price. So I'm measuring since the COVID lows, since the market reset, where are all of these shares? Where have they been aggregating? And you can see that over the last 2 months, we did have what's called a volume shelf forming. A volume shelf is just an area where you've got these volume nodes. And just keep in mind, all of these little volume bars here on the y-axis, that's measuring how much volume has occurred at that specific price range.
Yeah.
So anytime you've got a lot of these volume nodes forming like a shelf, like we see here on the chart, a lot of the time the price can use that as kind of a base to bounce off of, kind of launching off of it.
Right.
So on the monthly, we are starting to get close to kind of this, I'd call it like medium term resistance. It's over about a month, maybe, a year and a couple months.
Yep.
But that would be the area that I'm watching. And then on the weekly chart, I have just a simple measured move here, looking back from the September highs to the October lows and using that as your measured move. I don't like to have all those fib lines. It's just noisy. What I have is I just have the measured move and then the 1.618 extension highlighted in yellow. And that's right around 402. And you can see we've got a pretty strong weekly chart forming. And to me, this is not a bearish setup. It's a very strong setup here on the Qs. The problem is the lack of participation in the rest of that group of stocks that represent the NASDAQ, the Qs.
Yeah.
It's mostly Apple,
Tesla,
Google, Amazon pushing these things and that's a little concerning. So the fact that we are getting close to this resistance, we're at the 1.618 extension as well. I'm thinking, at least some caution needs to be heeded, but caution does not mean go all cash and
no, definitely not. Definitely not.
So, and some people do think that's the case. So don't think that.
I feel like you just get caught up though in that. You know what I mean? People get caught up, dude. You follow too many things on Twitter, you fall down the wrong rabbit hole, and all of a sudden you go from being an optimist, realizing how much being an optimist pays in the stock market. The next day you're a pessimist. You think the top is in, and you're like Peter Schiff's uncle. You know what I'm saying?
Yep. No, exactly. And that's the thing. I mean, like, you have to take price action into account before you even come up with any type of bias. You can come up with a thesis, but if price action invalidates that thesis, then let your ego go and go with what the market's telling you. So for now, we are kind of moving up along that monthly resistance. We're at the 1.618 extension. Today is OPEX, so you've got monthly options expiration today. You're going to have probably some pretty crazy moves, and we'll see what happens. The thing that concerns me, and let's go to IWM now. The thing that concerns me about IWM is the fact that I probably saw the same chart about 15 times yesterday on IWM.
Really?
Everybody, yeah, and it's
everybody sees this flag.
Well, not on monthly. The monthly, it's more than
this.
Yeah, and everyone's saying, well, all we're doing is retesting the previous highs as kind of an SR flip. So an SR flip is just previous resistance or previous support. Doesn't matter which one has become the opposite.
Yep.
So the fact that I've seen that so many times is concerning, because if everybody is seeing that, there's no way it's going to happen in the market. That means it becomes a crowded trade. You probably had a lot of people buying that level yesterday when we tested it. And, by definition in the market, that pretty much cannot hold, because if too many people are watching this, it's just not going to happen. So, I'm thinking we probably undercut this exact line. That's why I have a zone. Notice that this red line is not exactly that previous all-time high back in March. It's a zone that covers about $3 to $5. So I think we'll probably undercut it and then maybe reverse. But as always, it's price action. If you look at yesterday, so I have like a watch list of like 120 names, and I scroll through it, and if it looks like Christmas, then that means you've got a lot of green, a lot of red, all mixed together. And then, if it looks like, the devil showed up that day and everything's red and dark red, I mean like -3 to 7+%, then that's a little sketchy, especially if the markets are hitting all-time highs while this is happening. So this is a little concerning. Maybe it's just a flush before our next move up. I'm still bullish on IWM, but we really need to hold this level. If we start breaking down through this previous resistance that's potentially acting as support, then that's the problem. Now, on the monthly chart, this is where I become pretty bullish still. So same thing, we've got that volume shelf concept where if we're measuring the volume from the COVID lows, a lot of that volume has been aggregating here for quite a while. And that makes sense, right? It was only 10 months of us going literally nowhere for that volume to aggregate. So a lot of the time, these volume shelves are a function of consolidation zones, but it just helps you confirm like, okay, this has been consolidating and we've got a lot of volume aggregating here. And it just kind of shows like, okay, this consolidation is backed by volume here. And you can see we finally broke out. Now, I did pull a raindrop into the equation for this one, and you'll see we do have time left in the monthly chart. So we cannot, immediately start talking about how the monthly chart looks until it closes. But you'll notice shown by this raindrop, and a raindrop is essentially a volume weighted chart. So it shows where the volume profile is within the candle. So you can see the little kind of bulge there at the top shows quite a bit of volume profile at the top 50% of the range. And to me, I don't believe in buying volume or selling volume. If somebody's selling 1 million shares, somebody has to be there on the other side to buy those 1 million shares.
Right.
So what I look at is conviction in the market. If there are buyers there willing to absorb those 1 million shares at that price that institution or whoever wants to sell those shares, then you have conviction by buyers because they're willing to step in and absorb that supply. It's kind of like if you have a sponge and you've got a dry sponge and you start pouring water on that sponge is going to absorb that water because it's dry. The water can be your supply. The dry sponge can be your demand. If it's dry, you've got demand. However, if you pour water on a wet sponge, that water is just going to start pouring out of the bottom. And it's the same thing. It's a
great analogy.
If you start pouring supply onto the market and there's no buyers there to absorb that supply, the price has to drop in order to find buyers. So when you do have a bulge of volume like this at the top of the range, it shows that those buyers are willing to absorb that supply at that price. So right now, at least, it's looking decent, but we still have some time left.
Still got 10 days or so.
Yeah, and that's the thing. We just
make
have
assumptions.
to observe what it's forming.
Yeah.
And
question for you with this volume shelf. Just curious, because I've watched your videos on how to use it, but I'm sure there's people watching that don't that have not seen those videos. So for everybody watching, you can go to Jake's Twitter page. He has, I believe it was pinned for a while. I'm not sure if it still is, but he has a tweet that's got a lot of, I'm sure if you go to his most favorited tweets, it'll be there. He's got 3 basic videos that show you how to use this volume profile. When you use this, will the added support, if you would, of you seeing this increased volume have you bullish, of course, on this time frame, but will you be looking to put stops under a volume shelf? And if it was, would that be like a logical idea? Because I know if you have low volume, like right here above our heads where the volume profile is smaller, that's where price can move through that zone quickly down to this next heavy shelf, right?
Yep. Yeah. And so like for me, I'm generally using previous lows. So like the volume shelf, you can see price kind of trade around this area. So like my stop would definitely not be at like the volume shelf node right below. Right. It would probably be just that previous low like 4 months ago, because you can have a little bit of an undercut of the shelf. I've seen that all the time where you can undercut it a little bit
and then come back up.
Rip.
Yep.
So it wouldn't be an exact level. It'd be more probably a function of just the previous month's low, which I think that's the July low.
Right there. Yeah, right here.
Yeah. So So that would be kind of my area where the trade is likely getting close to being invalidated, if not invalidated. And the way it works is, if everybody is holding it break even, meaning that all of these shares right here, if the price is right at that shelf, all of those shares are holding it break even. So all you need is a slight spark in demand. The supply is already dried up, because if you're break even, why are you going to sell?
Right.
You already got in the trade. You're waiting for it to happen. All that supply is being absorbed. So all you need is that slight spark in demand. And we did get that through that really strong impulse candle 2-3 weeks ago through that previous resistance. And we'll see. I mean, if we've got a pretty strong wick going into the end of the day today on the weekly chart, we could be in for a nice reversal. But next week's Thanksgiving, you've got a holiday week. From my experience, Thanksgiving weeks are pretty strong. You kind of have this low volume melt up. Yeah. But we'll just have to see how it plays out. And the thing is, if these names that just got slaughtered start to, get capital flowing back in, that could be what helps the market continue up.
100%, maybe 100%.
It's like kind of like passing a baton or a battalion, whatever freaking term that is when they're running. Yeah. It's kind of like, okay, FANG is taking the market up now, and then you've got capital rotating into the next thing that's going, maybe it's airlines or whatever that bring the market to the next high. So we'll see what happens. But what I really want to dive into now is crypto, because that's the way I look at liquidity in the market.
Okay, tell us about that, because I have some questions for you about this too. I wanted to ask you about how you felt potential rate hikes would make an impact on stocks and on crypto, so this is a good transition. So when you say this is where you see liquidity, what do you mean exactly? Do you see money moving from stocks into crypto? Is that basically it? Because I've heard you talk about that before.
Well, so I look at Bitcoin as a risk on, risk off asset. So very similar to IWM. If you got IWM, and this is historically, IWM was the go-to for everybody to look for risk on, risk off. It's just, how are people feeling in the market? If IWM is absolutely exploding, risk is on. People are buying these names that don't have dividends, that don't really have that strong of a business model, at least for now. Their growth.
Rivian, not to name names. Rivian.
Yeah, that one. So whenever you do have Bitcoin starting to show signs of weakness, that tells me that, we've got this risk off sentiment. People are generally liquidating crypto pretty quick when the market turns. And you can see that by some of these candles on, especially the weekly chart. Now, on the monthly chart, we've got this volume backed breakout. Same thing that I mentioned with IWM last month. So this is already a valid candle since it happened in October. You can see quite a bit of that volume broke above these previous diagonal resistance. So we did have that volume backed breakout, but for every breakout, you do have a retest of that previous resistance, and that's generally pretty healthy. So if that was the case, this thing could move back down to the mid 40s.
Yep.
And the thesis on that is really on the weekly chart. So this is actually called double negative divergence. So anytime you have any type of negative divergence, you've got prices hitting higher highs, you've got the percent range or whatever oscillator you're using. I know you're a big user of divergence.
Yep.
I personally use the Williams percent range. It's something that I have found that is a lot more sensitive and will catch these divergences before RSI. On the weekly chart, I'm going to use an 8. So I'm just looking back essentially 2 months. Okay. So, 4 weeks in a month times 2, that's 8.
Yep.
I'm not this guy that's using a 14 period Williams percent range. What the hell is that? That's the most random input ever. And you have to optimize this stuff, right? I'm not using an 8 on the daily. I'm using a 10 because I want to look back 2 weeks. There's 5 trading days, at least in stocks for a week. Times 2, that's 10. So I'm optimizing these indicators, whatever time frame I'm on. In this case, I'm using the 8 because we're on the weekly. And this is concerning because it's called double negative divergence. That means that you've had divergence play out now twice. The first one was back in when we hit the September highs to the October highs, and we hit a lower high on the Williams percent range. But then you can see once again from mid-October to last week, we hit a new high. Yet the Williams percent range hit a new low, and we've started to move down. So that's 2 times divergence has played out or is starting to play out. And if you look at the blue lines, these are just the volume weighted average prices since we kind of had that capitulation in June and July. And you'll see when we did pull back in August and September, we moved right down to those lines. And those essentially represent the dollar cost average of anybody who's participated in Bitcoin, or in this case, Bitcoin, since those lows. So it's looking at, okay, what's the average price per coin that's been transacted since these lows?
That's very
and
interesting.
it's almost like it's like a break-even level, right? Like if the average person or average coin that's been transacted is right around 50,000, and when I made this chart is at 58K, that means that the average participant is holding at about a 15% profit right now.
Right.
So the price moves back down to that break-even zone. Once people are back to break even, you generally get bounces here because the supply dries up.
Right.
A lot of people have a misconception about supply and demand in levels on the chart. You can have a bounce, not because buyers stepped in, because supply dried up. If you've got a bunch of sellers taking profits, scaling out, but maybe keeping a core position, everybody is scaling out until they get back to break even. And then they're like, well, why am I selling? I'm back to break even. So if you're not familiar with the supply and demand curves, for those that are watching this, I would highly recommend checking out some basic videos on YouTube and understanding supply and demand. Prices do not always move up because buyers stepped in. If you look at the supply and demand curves, all you need is a drop in supply and demand to remain constant in
and
order
it can
for
still
prices
go. Yeah, 100%.
Same thing with prices moving down. People see, oh my gosh, prices are moving down, sellers are stepping in.
No, doesn't have to be that.
Maybe buyers just have evaporated and the supply is remaining constant, and the price has to drop in order to find buyers. So the point here is we could get a bounce in the VWAPs below, simply because that supply is drying up, because the average holder is back to break even.
That makes a lot of sense.
This is the elephant in the room for me. If Bitcoin is not doing well, it's hard for me to be very bullish on the market. If you've got Bitcoin showing this type of setup here, it's very hard for me to really press the gas in the market. Now, SPY looks good, the Qs look good, but when you've got Bitcoin showing this type of chart, and you've got some of these individual names really not participating, and it's a lot of individual names not participating, that's always a little bit of a red flag for me. So if and this is how I look at the market, if Bitcoin continues to break down and breaks this week's low, then I think we're probably going to explore the 46 to 49.5 area below. And notice that I'm using a very wide range. It's Bitcoin. You can see Bitcoin move 10% in literally a half a day. So
100%, bro.
That's kind of what I'm seeing on Bitcoin. That does have me a little cautious. Now, if you go to Ethereum, kind of the same thing that we saw on Bitcoin on the monthly chart. You've got kind of this previous zone of resistance that we did break out of last month. You've got a little bit of that volume profile above that area, which shows, some buyers willing to absorb that supply up there above resistance. But if you look at the weekly chart, it almost, this support almost looks too perfect. I mean, it is perfectly linear. I mean, it's a little like, it almost just seems like simulated, like it's almost too perfect.
It is.
And, I mean, it's like, okay, this can't continue forever.
Well, that kind of feeds my question for you. Are you fundamentally in belief that like we're still in a bull market for Bitcoin and crypto? Do you, or like as a whole, do you think that these can continue to go higher? Are you not a forecaster like that? You don't want to give me an answer. What are your thoughts on that?
I'll give you an answer. Answer is I don't know.
Naturally.
But yeah, I'm not trying to forecast the market. I use a lot of Fibonacci levels. So for example, like when we started to break that previous high from April that we hit all-time highs, once we started to break out of that, naturally I started to use the 1.618 extensions because there was no price action to the left. If you don't have any pivots or any type of previous support or resistance levels to the left, I like to use 1.618 extensions because it's generally a pretty self-fulfilling prophecy in the
It
market.
is, yeah. For whatever reason, you could say it's because everybody's using it, or you could say there's some other reason for it. It is. I definitely agree.
Yeah, and it's one of those things that I personally don't trade crypto. I like I like being able to turn off my brain at close on Friday, and I've traded crypto before, and that's something I have not been able to do. I can't sleep as good. If the
100%.
market is open, if the market is open and I have a position in it, I just can't turn off, especially something like Ethereum or Bitcoin, where you go to the bathroom and you come out and you got a 10% down move candle.
You
So,
keep mentioning that 10% down move, bro. You must have been in the bathroom one day and it really stung you.
well, everybody talks about gaps in
It's
crypto, and there
true.
are no gaps. Well, go to sleep at 9 p.m. and wake up at 7 p.m. and look at the market being down 15%. It might as well have gapped.
It might as well be a gap, right? Exactly.
That's a sleep gap.
Do you, do
But
you
yeah,
think
like for me, I love to look at crypto because it's raw supply and demand. You've got nothing manipulating it. Maybe you've got some big players in the market that influence the price, but it's raw supply and demand. You don't have the Fed stepping in and doing their weird thing. So I love analyzing crypto and using it as a risk on, risk off asset. So I'm not trading it actively. I don't have any crypto. Some people would call me an idiot for that. Whatever, to each their own.
yeah.
But I do use it as a tool to gauge sentiment in the overall financial markets in the world. And so when you are having some issues with the two main ones, Bitcoin and Ethereum, that's when I have a little bit of a yellow flag going up. Not like bearish, but like, hey, this needs to be taken into consideration.
So back to what you said about the Fed, do you feel? I actually heard something interesting yesterday that Grant Cardone, he made a bet with somebody on a podcast. This guy Ryan Pineda, like a real estate thing. He was saying that he thinks interest rates will actually be lower in a year than where they are today. Have you heard anything like that? Because I feel like everyone's talking about rates are going up. That's going to pull the stock market back. That's going to drop real estate prices. Do you have any take on that? I'm just curious.
Oh, I'm right in that line. I think the Fed is full of it. The Fed talks a lot, and I think honestly the Fed uses these statements as a way to gauge the market. How is the market going to react if we even mention tapering or raising rates? And so I think that you can't raise rates. I mean, as bad as that seems, like with the market or with the economy getting stronger, yeah, I don't think you can raise rates. And I do think at some point we are probably going to go to negative rates. That's just my opinion. Maybe I'm wrong. I don't.
Look at
I
Europe.
just
I mean, you a couple of years ago, if you would say that, people would be like, "You're crazy. Negative rates? No way." But now look at how many countries in Europe have negative interest rates. You know what I mean? So it's definitely an interesting perspective, and I appreciate you saying that. That comment about the tapering, just like them teasing. Like he'll have his FOMC speech. It'll be released. You can read the transcript. He'll come on TV and read it, and it'll have certain little, like, it's just about the way he words it, almost like you said, to stress test the market on tapering. And it doesn't seem like the market wants him to taper at all. So I think they're sitting there talking. It's almost like who wants to kick the can down the road longer? Who wants to be the Fed that's responsible? Who's the chair that's going to say we're raising rates, we're going to take a hit on the economy to handle inflation? Who wants to be that guy? I don't think Jerome Powell wants to be that guy. So if he gets reelected, I would almost sit in the boat that you and Grant are saying, that rates could stay low, if not go lower, which would be very crazy and to some people, but also really great to guys like you and me. We would just continue to ride this crazy bull market trend,
Yeah, and there's an interesting statistic. If any time a statistic comes out, I'm like, okay, well, this statistic came out. What did the market do after that? So there's, everybody's talking, oh, this is the biggest inflation since 1991. Well, go look at the market since 1991 and what happened within, 5 to 8 years.
Right.
The market went straight up.
Straight up.
This whole narrative about inflation is the highest in 30 years. Okay, well, go look at the last time it was that high 30 years ago. What happened? The market just continued to melt up. Why? Because that's how the market moves. It moves up over time. Inflation's not going anywhere. It's not something that, magically came into play. And I think a lot of inflation right now is a function of supply chain issues. I don't think it's necessarily I think it has to do with the monetary policy and all of that, but I
No, but I
think a
mean, if you
lot
look
of
at 100 ships sitting off the coast of California, you're going to say that that's not affecting price of supply. You're going to that wouldn't make any sense. Of course, it's going to make prices of the goods that are in the country go up because they're not here yet. We need that supply. So I definitely could see that point too. Absolutely, that's a great point.
I mean, look at
So,
chicken wings. I used to pay like $12 for chicken wings. Now, like some of these restaurants in Denver are $23 for like
yeah, bro.
14 weeks.
Yeah,
Like,
it's everything. It's crazy. And I think the supply chain has to say that it is just inflation and just the fact that we're printing money it's almost ignorant because we're having record-breaking issues with supply chain, not just in America, it's in other countries too. So it will be interesting to see, and I think the change of political policy over the next like 6 years too could make a big impact on that as well. So it depends on what policies are put in place and what is not put in place. That could also make inflation better, appear to be better or worse. But those are all really great points, bro. Tell me real quick, because I know we've kept you longer than you have. Tell us what we've got going on for Black Friday. I put a link, everybody, if you want to check out TrendSpider, check out their Black Friday sale. Is that your biggest sale of the year, I think, right? I don't think you've done anything like this all year.
definitely our biggest sale. So the way this sale has worked is we started on Monday at 65%, Tuesday 64, Wednesday 63, yesterday was 62. Today it's 61% off, and it's going to cap at 60% off. So after today, it's going to be 60% off the rest of the time, and we'll do that all the way to Cyber Monday. So we'll have about a week and a half left. And the thing is we have a free trial, so it's not like, oh my gosh, I got to sign up and pay for this today to get the 61% off. All you need to do is activate your 7-day free trial, and you're locked into that rate. So you still have time to try out the platform before you go have to buy it. So don't think that, okay, 61%, it goes to 60%, I have to buy it today. You just need to activate a trial. And if you don't like the platform, it's not for you, then you just cancel your subscription before the 7-day free trial's up, and you move along your way. So we just want to make sure people have the chance to use it before they go and start to just pay for something that they don't even know how to use. And we have a ton of resources. As you mentioned, I have a ton of videos on all of these things that we touched on, educational videos, really showing different case studies on how to use these things. And one thing I would say is the Raindrop charts in crypto, for those that are trading crypto, are definitely some of the most powerful tools that I've used, because crypto is just such a raw supply and demand market right now. That's what the Raindrop does best in, just something that has raw supply and demand. So if you are trading crypto, I know this is more of an FX type of group. So if there are people that are
we got a lot of crypto guys, bro. I'm doing more crypto now than I ever have before. So we got a lot of crypto guys too. And I think one other comment I have to make about your whole platform, like, you guys never settle. TrendSpider TV, brand new thing. What did that come out? A couple of months ago? Not even, right? Brand new. Just the other day, I hopped on your Twitter space, 600, 800 people on your first one. I'm like, this is crazy. And I think that that's a testament to you and the team, like we started the call talking about. Like, you guys never settle. Like, you're coming for the industry. You want everyone on TrendSpider, and that's why I love it. I mean, like, I support you guys 100% because I love the energy you put behind it. I love that you're actually trying to bring a powerful service to make an impact on traders' performance. I think, too, just as like business owner to business owner, I trade and I sell education, and I have a couple other like coaching things that I do as well. Software as a service, man. You guys are in the right business. You're providing a good service. Like, everything you guys are about, people should look at it and say, these guys are sharp. They are actually making a difference. Like, why wouldn't I want to be a part of this in some way? Whether you're become like me and you're an affiliate and you're promoting it, or if you're just a trader and you're just using it. Because way more traders, I'm sure, are quiet. They don't post on social media like us. They don't do videos like us. They just trade. And I think if you're that guy or you're the promotion guy, like, TrendSpider makes a difference. And I'm just being honest, because TradingView does not do half the shit that you guys do. And that's really where the difference is. The back testing, the automation, the heat map, the seasonality, all of it makes a difference. And it works in Forex too. It does help me in the volume profile. Remember, we got on a call a couple of months ago to go over the volume profile. It made a huge difference for me. The point of control, like understanding that. So a lot of new learning. I feel like, as traders grow, you start making a little bit of money, and sometimes you get stagnant and you're like, oh, I got my system, I got my strategy. But then you come to TrendSpider and you see all the tools that you guys have, the auto back testing, the automatic trend lines, the automatic fibs. I'm like, This makes it better. This can make us smarter. This can make it easier. So I feel like if you're one of those guys that doesn't settle and you're always looking to push yourself, definitely go check out TrendSpider, especially now, 61% off. You guys are doing a bigger discount than I am. I'm doing I don't want to say it yet because I'm dropping it on Monday. It's like a little surprise, but I'm not doing 61%. It's close, but not 61%. So it's a great deal. You guys are offering a great deal.
I love it, man. Thank you. And that's one thing I'll mention on real quick.
Yeah.
I used to use TradingView. I'm not bashing them. I think they created a new way. But if you're a customer of TradingView or you're an affiliate or a partner of TradingView, you are not going to get a live person responding to you. The product is something that's important to us at TrendSpider, but the customer relationship is just as important. So like if you do sign up, not only do we have the videos, we've got one-on-one training. So you can actually, get on the screen share with somebody who works at TrendSpider and they will answer your questions, during that hour of the one-on-one. So to us, you can't have a good product without a good customer relationship and service side of things. And so that's something that is really big to me. I used to help TradingView push their Black Friday sales, and I didn't even know what link to use. I didn't even know how to use the damn thing. I couldn't get anybody
that has
on
not changed. That is still the same. That's why I still work with you. That's why I still talk with you. And that's why I tell everybody. And I said that to you in Denver. I was like, I know like half your team. Like I know, like I've met them. Like I actually talk to the people developing things. And it's like, that's rare, to be as big as you guys are and still have that personal touch. That's again, a testament to the customer service and the team that you guys are working with. So it's awesome. I love it.
Thanks, man. Yeah, we're just trying to change the industry in more ways than one. We want to have that customer relationship, but we also, we want to create new ways to visualize the market. We've got a lot of people who've been trading 20, 30 years that start using some of these new tools, and it completely changes the way they look at the market because it was generally what they were doing before, but optimized. So like raindrops, right? If you want to go look at the daily volume for yesterday, you would go look at the 2-minute candle, go look at the 5-minute candle, look at where those volume nodes were. Well, with the raindrop, that erases that whole manual process. You just go on the raindrop and you see, okay, well, within this range, this much volume happened there. You don't have to go to these lower time frames. And the whole point is to make the whole experience of market analysis more efficient. And that's what we're really aiming to do.
I love it, bro. Well, thank you for coming on, Jake. Everybody, if you enjoyed Jake's knowledge, Jake's insight, just hit the thumbs up button and make sure you hit the links in the description. I put Jake's Twitter. I put the link for the Black Friday sale. Everything you guys will need will be down there. Make sure you say thank you to Jake, and I'm sure we'll see you on some other video this week, Jake. You got TrendSpider TV videos going up every day, so we'll be seeing you on the YouTube for sure.
Sounds good, man. Well, thank you for having me. It was a pleasure as always, and looking forward to doing one of these soon.
Yeah, definitely, bro. Have a good day. Thanks, man.
You too. See ya.
Pretty awesome, right, everybody? Make sure you guys smash the thumbs up button. Jake is a great guy. A lot of valuable knowledge from him, and especially talking about just what we were